Okay, I will start the lesson number 13. I'm sorry, lesson number 12. I think ledger accounts for non-current assets and provision for depreciation. In here, business must maintain the separate records of the cost and accumulate depreciation of each type of non-current asset. And we mainly concern about cost accounts, historical cost of the asset is recorded, and provision for depreciation account, or we call it accumulated depreciation is recorded here. So these are the two main accounts we must maintain. So if you know how to record them, then you can do any ledger accounts under this. Okay. So remember two accounts, cost account that's been as an example, if it is a machinery account, and the other one is provision for depreciation account, machinery or provision depreciation account for machinery. So those are the two accounts we concern. So we go to the next one. Okay, you can see, I think the next one is ledger accounts for non-current assets and provision for depreciation. At the end of the year, the provision for depreciation account is updated with depreciation charge for the year. Now, when you prepare the provision for depreciation account, and then you can see depreciation charge. The balance on the account is entered into the statement of financial position, and this expense is entered in the statement of profit. Now, when you prepare your provision for depreciation account, there will be a update amount which is known as a depreciation figure, and there will be a balance amount which is known as the it depends, it goes to it goes to your financial position based on the decision you make based on like income or expense, whether it's income or expense. So that will be, we will teach you how to do it. Now, first of all, you need to know the double entry. If you get anything to record under depreciation, so mainly you concern about two accounts. One is the depreciation account. Actually, we will record them in the P&L or statement of comprehensive income. That's why I put within bracket them. So depreciation account will be debited under that, and the provision for depreciation account credited. So remember this double entry. Now I'm going to show you how it's happened. So depreciation account debit or statement of comprehensive account debit, and the provision for depreciation account will be credited. So remember, easy to remember this. So if you remember only one, this double entry, it's easy to do any question. So I have taken the same question what we calculated in the previous lesson for you to understand. So yeah, now even you can remember, we use the formula and under straight line method calculate the depreciation, that is 10,000. We use the same example and same answer to record them in the ledger account. So the question they're asking is you to record these depreciation for 5 years. So under straight line method, each year depreciation will be same, 10,000. So we have done that. So now how are we going to record? There is a confusion here, therefore I'm going to here. Remember, the first thing is to have the machine account. There's a machine account, and instead for the provision account, please use this account to get an idea. At the beginning, it's easy to understand. So when you bought, the first thing is they had bought machinery. So double entry will be when you bought a machine, machinery account debit, cash or bank credit. So that's first nothing. So machinery account debit 50,000. That's why they put bank or trade payable if you bought on credit. So we don't know, that's why they do whatever. Okay, maybe bank or maybe trade payable. So then you can balance off these two. That's done. That's nothing. Okay. But then only we have to record them in the provision for depreciation account. So look at this. This is easy for you to understand. Now, so in here, we have already calculated depreciation before, since each year depreciation is 10,000. Now, normally, you know, depreciation calculated at the end of each year. Imagine if we are calculating depreciation, we can't calculate depreciation at the beginning of the year. Now we get information during the year, and at the end of the year, you will calculate depreciation. I hope you understood that. So then at the beginning, there can't be a balance because we don't know. Okay. Okay. So depreciation amount is 10,000 each year. So since there are no balance program, first thing you have to record, if there is no balance, give me one. I'm sorry for that issue. Okay, I'm explaining again this provision for depreciation part. So I told you the opening balance will be nil because there's no, but in that particular year, at the end of year, balance will be how much? 10,000. Year one depreciation will be 10,000. Okay. And the double entry we have to consider, our double entry is, if you go to double entry again, the depreciation account will be debit, provision for depreciation account will be credited. So we are preparing provision for depreciation account here. So provision for depreciation account will be credited. That's why I put written 10,000, 10,000, and you record here depreciation, or you can write here SCI, or Statement of Comprehensive Income. Now you opening balance is nil, then according to double entry 10,000 here, then you balance off 10,000, 10,000, then the balance will be 10,000. We record it as a balance carried out. Let me know, is it clear, or shall I explain it again?
Sir, are you sharing the screen, sir?
I'm sorry, I think after this my signal disconnect now, so I'm sorry, I have to share it again. Sorry, it's a mistake. Mm, okay, I'm sorry. Okay, I will explain again. Uh, okay, now you know, according to this question, the depreciation per year is 10,000 per annum, 10,000 per annum. Now, other thing you know, each year depreciation is calculated at the end of the year. That's another important thing. And based on this question, if you are asked to prepare machinery account and the provision for depreciation account, machinery account is nothing. When you bought, machinery account debit, cash account credit, that is recorded and balance off. That's done. Uh, this is given in your textbook. It's a bit confusing. That's why I have prepared separate one for you to understand. So this is the way you do. At the beginning of the year, depreciation was nil because no depreciation at the starting year. So balance brought down 0. I put cross here. Then we go to the double entry, depreciation account debit, provision account credit. So depreciation amount is 10,000. So depreciation account or statement in debit, we don't need to concern that. And the provision, this is the provision account, it will be credited. Provision account will be credited. So the other account name is depreciation in the statement of comprehensive income. Then you balance off. Total will be 10,000 and 10,000 will bring here. Then there will be a balance which is known as balance carried down 10,000 in the year 1. And you bring that balance the year 2, balance brought down 10,000. So it is completed the year 1 recording. And now balance brought down, year 2 balance brought down figure is 10,000. Again, you know, since it's straight line method, each year depreciation will be set 10,000. You apply the same double entry. Depreciation or statement of comprehensive income is debit. Provision account is credit. So provision account is credit. You write the other account name. And again, balance of 10,000 plus 10,000, 20, 20,000. And there will be a balance 20,000 and bring it to the year 3 as balance brought down. Is it clear or not? Anything if it is not clear, ask me.
Yes.
Anyone, please, if you are not clear, please ask me. Now, because if this time, if you get this question, and if you are asked to calculate, prepare the machinery account and provision for depreciation account, will you able to do it?
Yes, sir.
Okay,
Yes.
okay, then I'm happy. But if you have doubt, please ask me. Okay, okay. Then the work example for reducing balance. Now, this is, I'm sorry, yeah, I changed this. Sorry. We go to, okay, we go to the, now this is straight line method. Now, how are we going to record them in the reducing balance method? So I think same question we have taken, and in there we have calculated the depreciation for each year. Okay, year 1 depreciation is this one. I think last lesson, I think 11, 12, I taught you how do we get this. I think we discussed. Now we are using these items and then we are recording in the provision for depreciation account. So the first will be, so the first thing will be the same thing, machine. When you bought a machine, machine account debit, bank account credit, and that's same. And here also they made the same thingy. Therefore, I will be, I think it's better if I do it. We'll see whether I have done it. No, I haven't done that one. Therefore, I will take a new slide. And I'll try to insert a table. If you insert this table, we can take copy and take this and then change. It's easy. Copy and take a blank one. We'll take this. Okay. Right here, provision for depreciation account. Okay, we will write here. It's easy for us to, okay, these, we take these figures. This one I will take because it's easy. I feel to take that one and remember. Otherwise, we have to look again and again. So these are the figures we need, depreciation figures we need to concern. So here and the depreciation. So we'll change the figures based on that. Now here also, the year one opening balance will be nil. You can put this one or 0. And then depreciation here will be 11,000. What will happen? Our double entry will be income statement debit, provision account credit. So instead of 10,000, we need to put here 11,000. That's the only difference. Now we balance this. Here the total will be 11,000 and the same figure will take here 11,000. And here the balance carried down figure will be 11,000. And you bring that figure down, this figure will be 11,000. That's the first year of depreciation, recording depreciation provision account under reducing balance method. That's important. Clear? Right here, reducing concept. Reducing. Is it clear up to here? Now we go to the second year. Second year, our balance we know 11,000 now, year 2. We brought it from here, year 1. And then our depreciation figure is 8,800, not the 10,000. So we use that same figure, 8,800. So now how do we get this figure? 11,000 plus 8,800 will be 19,800. The same figure will be in this side when you balance off. Now 19,800 and the balance will be how much? Not 20,000 according to this. It should be 19,800. Third year also I will do. Now this balance will bring it to the year 3 opening balance. It's 19,800. Okay, that's done. And year 3 depreciation we calculate here under this 7,040. So we use that. So then the total will be 19 plus 7, 26,860. Yes. So same figure will be here, 26,860. Unfortunately, I forgot to record this now. After the session, 26,860. So balance will be also 26,860. That's done. I think, is it now you, can you do, if they ask you to do prepare provision for depreciation account under reducing balance method, only thing is to calculation. I have taught in the previous one also, then record them in the same method. Is it clear or not?
Yes.
Okay, that's great. So that's the only thing you need to do. Okay. Okay, another important thing I'm doing, most important thing for the exam mainly, I concern. So concern those two methods, okay? It's really important. And okay, we get another question like that. Same type of question. Now, Henry started a business making glassware. He began trading on 1st January 2015. Okay, we'll record this question. If you want, we can. What's recording? Is it recording? Ah, it's recording still, no? Yeah. Students, can you see recording still? How can I check
It's
that? Huh?
it's still recording, sir.
It's not visible to me. Normally, you get a like a red. Ah, okay. In the screen sharing thingy, you can see that circle and the red dot line. Is it the one?
Yeah, sir.
Yeah. Yes, that's right.
Yes, sir. Yeah.
Yes. Thank you. Okay. Henry started a business. So we will be most probably our time will be over by 9:50. I'm planning to finish within half an hour. Now this one is done, so depreciation only will be able to complete, and I'm starting after this disposal part. So this is this is important question for you to do. Therefore, revise what I'm doing. It's very important. Okay, Henry started a business making glassware. He began trading on 1st January 2015. He purchased a furnace hearth with which to heat the glass of 50,000 pound by check on that day. He has been advised that he should depreciate the equipment for 5% per annum using straight line method. Be easy. We now need to prepare the cost account. So first one is the machinery account, like furnace account. How did he buy? Mm, by check. So furnace account debit, you write here bank, and then what happened? You just balance it. That's all. Balance carried down will here, brought down will here. That's simple thing. That's normal way preparing this thing. But now it's important thing is to find the depreciation. Please, how do we calculate? Someone tell me how do we calculate depreciation now? Based on the straight line method. So percentage is given. By percentage is given. Then easily you can find cost into the percentage. Cost is 50,000 into 5%. Um, it's 2,500 is your depreciation. And the question they're asking us to do prepare the provision account for 2 years. So at the beginning of the year, what will happen? Is there a depreciation at the beginning of the year? No, they haven't recorded even. Normally, it's better if you record balance brought down zero or dash, but they haven't recorded. So then what we do is double entry. Our double entry is depreciation or statement of comprehensive income debit and provision account credit. How much? 2,500. The red color in our previous one. This one. Same thing. Same thing. Okay, 2,500. Then balance of 2,500 is a total. Here also you put the total, and the balance carried down is 2,500 in 2015, 31st December of the year one. You bring that figure to 2016 January, balance brought down 2,500. Second year depreciation same no, because straight line we use the double entry. Statement of comprehensive income is debit, and this one is credit. Add 5,000, total 5,000, and there will be balance carried down 5,000 because zero balance is there. Bring it here, balance brought down 5,000. That's all. So that's the way you need to calculate and prepare. When you get the idea, it's nothing, it's very, very easy. So that's what we need to learn under this recording depreciation in the ledger account. Okay, I have completed that part also. Is there any question? Okay, if you have any doubt, please let me know.
Sir, the slide before this one,
Wait, this one.
yes, in that the furnace cost, like the normal double entry had put into the ledger account, no?
Yeah, this is furnace cost mean actually imagine it's a asset account, fixed asset account. Now the like a machinery account. When you buy a machinery to the business, double entry will be machinery account debit, bank account credit if you are paying by check. Okay.
Yeah.
Now here what are they buying? Furnace account. So furnace account debit and the bank account credit. So what happened to the furnace account debited? You write the other account name normally. That's normally vice versa in the double entry rule. Bank account credit. Okay.
Uh, don't we have to write the bank account?
Sorry.
Don't we have to write the bank account
Yes,
like
they have written
a
no. Yeah, yeah, they have written a bank.
no, no, I'm saying, sir, bank account
No,
like
no, 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 no. They don't know. No, because why can't you remember in here also? If they ask you, only you have to prepare. Normally in this question, they are asking you this relevant non-current asset account and the provision account only.
okay, okay, sir. Yeah.
You don't need to prepare bank account unnecessary wasting time for that. They don't give marks. No? Okay, clear, no?
Yes, sir.
Okay. Some are joining now. When the session is going to over, then only they are joining. Why couldn't say but late? Then we are moving to the last part. I stop share this one. And I'm going to disposal part. Okay, this is the last part. So if you when we complete this session, you may be able to do any depreciation question, any disposal question. So disposal is very easy. I'm teaching you a very easy method to do this. Uh, Actually, the meaning of disposal is selling. You are selling. So especially you are selling the after using non-current asset for some number of years, you are going to sell it. So that's the meaning of disposal of non-current asset. And it's exactly explain what I taught you here. And the important thing I want to tell you, when you are going to sell, there can be a profit on disposal and loss on disposal. Now, as an example, how do we calculate that? Now, when you are going to sell, imagine you use a vehicle for 5 years and you are going to sell it for some amount. There is a carrying value of that. I think we have already calculated carrying value in the previous today in the lesson 12 and 11. How do we get the carrying value? Mean at that moment value of the asset. So imagine if you are selling it for $10,000, but actual value is 8,000. So it's a profit on disposal because actual value is 8,000. So you are selling it for more than the actual value. It's a profit. Imagine you are selling it for 10,000, but actual value is 12,000 or carrying value is 12,000. Actually, it's called loss on disposal. So it's different between the amount you receive and the carrying value. So if you get better amount than the carrying value, it's good. If you get a less amount than carrying, that's called is loss. So that's a different. And another important thing, if it is a profit on disposal, we consider it as an income. If it is a loss on disposal, we consider that as an expense. That's really important. It's explained in this slide about those things. Okay. Now, I'm going to teach you a very easy way. Now, if there's a question like this, in the same question we use finance, the previous question, there's a cost of finance is 55,000. Okay, cost is 55. Provision for depreciation is 26,040. Now, how do you get the actual value or the carrying value of the asset by now? From cost, you deduct the provision. So this is the actual value of the asset. But they're selling it for how much? 20,000. Actual value is more than the selling price. Therefore, it's a loss because you get less amount than the actual value. How much is less? 28,160 minus 20. That's mean 8,160 is loss on disposal. So this is the way if they ask a question, calculate the profit or loss on disposal from the information given. This is the way you do. First, you get the cost, take the provision, calculate the carrying value, which is known as the actual value of the asset, and check with the compare it with the amount you are going to sell. So the difference, if it is if your selling price is higher than the carrying value, it's good, it's a profit. If the selling price lower than the actual carrying value, which is it's the loss for the business, loss on disposal. So that's the one thing you must understand. And there are 3 or 4 double entries you need to remember under disposal account. Now, first one is very easy. If you buy a machinery or something, I don't need to explain machinery account, debit, bank, or trade payable credit. Then the step one, when you start to dispose the non-current asset, these three steps you must remember. It's very important, but I have a shortcut also for that. What first thing is when you remove the cost of non-current asset, the double entry will be you are removing, disposing. So disposal account will be debited and non-current asset will be credited. And here remember to take the cost value. Imagine if you bought it 10 years before 10,000, that value should be taken, not the selling price. Remember, it's important. Original cost value should be taken in this step. Disposal account and non-current asset amount. That's a debit and credit entry. Remove cost. Second one is provision. Provision double entry will be provision for depreciation account debit, disposal account credit. And the third one is when you get the money after selling, the money is coming to your bank account debit, disposal account credit. So very easy to remember. Both the cases at the beginning disposal will be debit and the last two cases disposal will be credited. So when you remove the cost, disposal account debit, asset account credit, then you are going to provision account debit, disposal account credit, and you get the money, bank account debit, disposal account credit. Very easy to remember. So that's a double entry. Please remember, it's your duty to remember that. Now this is for advanced questions normally you give. Now if the asset is sold in exchange for another asset. Now as an example, you are going to buy another new car by selling your car or exchanging your car by and paying some money to them. So the new current asset is the one you are coming to your business. New car is coming to your business. That's imagine 25 million is the value, new or 25 million, new it's debited. And your car is a disposed one, it's imagine 20 million is the value. And from hand you are giving them another 5 million. So the answer will be new non-current asset debit, disposal account credit, and bank account credit. So that's a question. No, you can't say whether disposal is asset or expense. That's why I told you at the beginning. It can be income, it can be expense. It based on whether it's a profit on disposal or loss on disposal. So if it is it's a cost account. Like if you consider it, even though you consider cost, like it's mainly it's like profit on disposal or loss in disposal. It can be income, it can be expense based on the activity. Now, I told you when you are going to sell your fixed asset, your current value, or we can say carryover value, is higher than the selling price. So it is a loss on disposal. And if it is opposite, it's a profit on disposal. So that's what you need to remember. It can be a profit, it can be income, it can be a cost. So take this example. They may give you a question like this, cost figure. So if you imagine if you forget everything, double entries or anything if you forget, but don't forget, it's your duty to remember, study that, okay? Remember always in the disposal account, cost is coming to the debit side. Cost is coming to the debit side. And provision and money coming to the business will come into the credit side. So first thing is cost is always debit, provision and bank will be credited. Now cost figure 55, provision figure 26, money coming to your business, revenue from, money coming to the business is loss on disposal, revenue from sale 20,000. That's the money coming to your business. Then what you do is you are going to calculate and see whether there is a profit or loss on disposal. Okay, if it is in the credit side here, it goes to the debit side. In income, it's a loss on 100%. So it's 8,160 loss on disposal. But same thing you can record under double entry. First entry is disposal account debit and asset account credit. And the second entry, provision for depreciation account debit, disposal account credit. And third entry, bank account debit, disposal account credit, and balance off and see whether there is a profit or loss on disposal. That's what you need to do. That's all. So with that, we will be finishing our complete thingy. That's what you need to study mainly and focusing. So if you know that area, the depreciation disposal question, what I taught, if you know, you will be able to handle that question without any doubt. Are you clear everything? Any doubt?
Clear, sir.
Okay. hope you got everything on depreciation and disposal. And our next class will be on Monday. It's a plan. Because tomorrow tomorrow is Thursday, no? Sorry, next class we can have on Friday. I'm sorry, Thursday. Today Wednesday, Thursday, Friday time will be decided. We'll let you know. We can have Friday class, and from that mainly we can cover. I think not anything. I think irrecoverable debt is a big lesson. That one will be covered on that day. Is all good? Everything, students?
Yes, sir.
Yes, sir.
Gunasekara, why did you join late? I mean, you were at the joining at the last moment. Why is that? You missed most of the important stuff, Gunasekara. So recording will be there. I'll upload it later. Then you can watch that part. Okay. Then we'll stop, students, since it's done. Can't start a new one till 10 o'clock. So we'll be having next session, start the new session Friday, most probably same time, and complete the irrecoverable debt. Okay. Have a nice day then. Bye.
Thank you, sir.
Okay.